Is a mortgage with an amortization of over 25 years a bad idea? My answer on this is no. It's not necessarily the amortization period that you should be focused on. I'm of the belief, and this might sound strange coming from a guy that's done this for so long, but I'm of the opinion that you probably want to get rid of your mortgage as quickly as possible. What the amortization period refers to is how long of a time period the bank is going to calculate your mortgage payments over. And so it's typical that people will pick 25 years, but you can get more than that. You can get a higher amortization. But at the end of the day, the amortization period means you're going to have a mortgage for a longer period of time. So we're going to have a 25-year mortgage, and you are going to have to pay interest for a longer period of time. So, but the trade-off becomes, in exchange for paying all of that interest over a longer period of time, that your payments get smaller with each period. So at 15 years, your payment might be, I don't know, this big. At 25-year amortization, your payment will be this big, but you're paying extra interest for longer. And at 35 years, your mortgage payment might be this big, but again, you're paying more interest over the longer period of time. So just to put some numbers to all of this, if you took a $350,000 mortgage over 25 years at 4%, you'd pay over $200,000 in interest. So that means your home, you have $550,000 into your home, not including your down payment, and not including any of the maintenance and repair. So basically, you've paid for your house twice over 25 years, if that's the period. So, and that assumes huge assumption there that interest rates stay at 4% over 25 years, which I think is highly unlikely. But going with the example, you're going to pay for your house twice. So is it a good idea to take an amortization of over 25 years? I would argue it's not a good idea to take a mortgage with any amortization period, but you should get an amortization period that results in a payment that you can afford, and then from there, it's more important to have a plan as to how you're going to pay this mortgage off quickly. So many banks or lenders will give you prepayment privileges where you can pay down a chunk of the mortgage every year with no penalty, or you can increase your payments and have that amount of increase pay off the principal quicker. So a couple of questions that you're going to want to ask yourself when you are considering getting a longer amortization period or even a 25-year amortization period, which is, will your home rise in value over and above that interest cost that you're going to have? So in our example, we said you're going to end up paying $200,000 in interest. Well, is your home going to go up $200,000? If the answer is yes, then go to town, have a long amortization period. It doesn't really matter. What about your down payment? Are you going to be able to get your down payment back? Meaning, will the property rise over and above the interest cost and the amount of money that you put into the property? What if interest rates don't average out at a constant rate over the 25 years? How's that going to impact the money that you've put into that home? And so there's a couple of questions or a couple of things to consider to answer the question, is a mortgage with an amortization period of over 25 years a bad idea? We would suggest get an amortization period that today is going to allow you to make the payment, but while you're doing that, make sure that you understand how you can pay the mortgage off sooner rather than later so that you don't end up paying twice for your home. And if you're looking for a mortgage, we'd encourage you to visit emilynow.ca where you can punch in a mortgage amount, see what your options are, sort of mess around with the numbers a little bit like a mortgage calculator, but then more importantly, you can get a score based on your overall financial picture. You can take that score, which is a representation of the likelihood of you being approved, and then you can see which banks or lenders would approve you and what kind of interest rates and terms they're going to offer you. So get started today. It doesn't cost anything. It's free.